Operating an Arkansas business without a legal structure puts your personal wealth on a fault line. One lawsuit or breached contract can shatter everything. By default, the state considers you a sole proprietor. In this structure, there is zero legal separation between your business liabilities and your personal assets. You and the business are the same entity. But Arkansas offers a structural defense. For a $45 online filing fee, you build a legal wall around your personal life. This barrier, the corporate veil, isolates your home, vehicles, and life savings from debts filed against your commercial operation. Entity formation provides the legal scaffolding for wealth preservation, ensuring that your private life remains isolated from the specific liabilities of your business. You are trading a nominal $45 state fee to shield hundreds of thousands of dollars in personal holdings from total loss. For founder, this $45 transaction creates a permanent barrier between a routine business dispute and personal financial insolvency. Once you decide to build that shield, you have to choose how it is structured under Arkansas law. This diagram outlines the three primary corporate architectures available: the limited liability company, the C corporation, and the S corporation. Look at the LLC structure first. It operates on pass-through taxation. The business itself pays no state income tax. Instead, all profits flow directly down to your personal Arkansas tax return. The C corporation operates differently. Income here is taxed twice, once at the corporate level and then again at the personal level when shareholders receive dividends. However, Arkansas is actively reducing its corporate tax burden. By 2027, the top graduated rate for C-Corps scales down to 4.1%, making it competitive for businesses retaining heavy capital. Then there is the S corporation. This is a federal tax election that acts as a powerful arbitrage tool for high-earning founders. An S-Corp lets you divide your income into two streams: a reasonable W-2 salary and owner distributions. Those distributions entirely bypass the 15.3% federal self-employment tax. Arkansas provides an operational advantage here. The state automatically recognizes your federal Subchapter S election without requiring redundant state-level filings. S-Corps and pass-through LLCs can also utilize the Arkansas Pass-Through Entity Tax, or PET. This election applies a flat 3.9% rate at the entity level, serving as a direct workaround to bypass the $10,000 federal SALT deduction cap. Selecting your entity type is a mathematical optimization problem designed to preserve your specific capital structure.
This video contains affiliate links. I have a relationship with the brands in this video and earn a referral fee when you shop through the links in the description below. Before we dive into the exact state steps and paperwork, let's talk about your foundation. You absolutely cannot build a successful brand or protect your personal assets without a properly structured legal entity. Most people try to launch as a sole proprietor or cut corners on their initial state filings. And that is exactly why they face massive personal liabilities or get their applications rejected by the Secretary of State. Your business must be a legitimate, separate legal entity. That's where Busy comes in. Busy is the absolute best formation service out there, handling your entire LLC or corporation setup for just $0 plus state fees. They take care of all the heavy legal lifting for you, filing your official articles of organization, providing your legally required registered agent service, and setting up your ongoing compliance alerts, so you never miss a state deadline. This step is non-negotiable if you want to operate legally and protect your wealth. I've linked my full in-depth review of Busy in the description, so you can see exactly why they are my top recommendation. Make sure to use my link down below to register your business through Busy today, which will also unlock exclusive discounts and perks. Get your legal foundation handled first. And then, let's get into the step.
Before you file any of these structures, you have to address the privacy vulnerability built into the formation process. Under Arkansas law, all entity formation documents become permanent, searchable public records inside the Secretary of State's database. If you act as your own registered agent and list your residential address, you are inviting data scrapers, aggressive marketers, and legal process servers to your home. The solution is hiring a commercial registered agent. This is a required third party with a physical Arkansas street address that acts as your legal firewall, keeping your home address off the public ledger. A commercial registered agent serves as a strict privacy buffer, ensuring state compliance without sacrificing your personal security. With your privacy secured, you can execute the actual formation with the state. Step 1 is the name check. You must use the Arkansas Business Entity Search to verify a name that is distinguishable from existing businesses, and it must include a required abbreviation like LLC.
Step 2 requires accessing the Arkansas Secretary of State portal. Here, you will locate and file Form LL-01, the Certificate of Organization. This form demands a structural choice. You must define on the public record whether the entity will be member-managed by its owners or manager-managed by appointed operators. Step 3 is data entry. You will input your commercial registered agent's exact physical address, along with a dedicated contact address to receive future franchise tax notices. When you reach checkout, note the cost discrepancy. Submitting the document through the online portal costs $45. Mailing paper forms costs $50. More importantly, paper filing carries a time penalty. Mailed documents add weeks of delay, whereas the digital portal processes applications in 3 to 7 days. Mastering this over-the-shoulder digital execution prevents bureaucratic friction and protects your early startup momentum. Receiving your approved certificate of organization from a state is only the starting line. Active commercial operations require a secondary checklist. First, you must immediately acquire an employer identification number, or EIN, to open bank accounts or hire employees. This 9-digit number is issued for free directly through the IRS website. Bypass the middleman services that charge to pull this number for you. Next, you must draft an operating agreement. This private document serves as the internal governing law of your entity. If you fail to write a custom agreement, rigid Arkansas default statutes dictate how your company splits profits, handles voting rights, and manages member buyouts. Even for single-member LLCs, the operating agreement is essential. It provides documentary proof to courts and banks that your business operates as a distinct, organized legal entity. Third, you must open a dedicated business checking account. Using modern digital fintech platforms makes establishing this financial separation nearly instant. Never mix personal and business funds. Paying your residential rent or buying groceries from the business account is known as commingling. Commingling capital or operating without a governing agreement gives a judge the legal basis to pierce your corporate veil. They can collapse the entity and expose your personal assets to business creditors. To keep that corporate veil intact year after year, Arkansas requires ongoing maintenance. The single most critical compliance rule is the annual franchise tax report, which is due every year on May 1st. The financial requirement is straightforward. LLCs pay a flat minimum of $150. C-Corps calculate their tax at 0.3% of outstanding capital stock, also with a $150 minimum. Missing the May 1st deadline triggers penalties, a $35 late fee, a 10% interest accrual on the balance, and eventually the administrative revocation of your corporate charter. Failing to pay the franchise tax unplugs your corporate shield. The state dissolves your entity, instantly re-exposing you to personal liability for business actions. When you look at the total financial architecture we have constructed, the value of the structure is evident. Arkansas compliance involves a $45 setup fee and $150 annual requirement. Compare those fees against personal bankruptcy caused by an unprotected lawsuit. Add the tax optimizations unlocked by combining that shield with an S-Corp election and pass-through entity tax. By capping your personal exposure for a fixed annual cost, the Arkansas Corporate Shield provides the structural security required to scale a business while your private assets remain protected.